Speaking of very little resistance, the bulls are getting none as we kick off the final hour of trade. Let's get right to the floor show. And it's Bullseye Option Chief Market Analyst Alan Nuckman live from the floor of the CBOE in Chicago. Alan, how are investors supposed to read a jump of 600 points yesterday for the NASDAQ, a drop of 200, nearly 300 this morning, and a recovery now? We're up 109 points.
Well, as a trader, I would look at it as a much-needed shakeout or shake-up. I'm seeing a lot of positives here, and as a self-professed bull market genius and an optimism wins guy, I love the price action that we saw on Friday. We made new swing lows, and then we closed higher, so it was a positive close. That was very, very positive. You're also seeing bullish divergence in the fact that once we made those new swing lows, we did not make new highs in volatility, so the fear factor wasn't there. That was very much a bullish sign as well, and I love where we stand right now. We've been trading sideways, and you talked about the rotation, and we've seen the Dow make new highs just a couple weeks ago, where it's been 4 weeks. Now again, put that in perspective, 4 full weeks since all-time forever highs, but there's also been 50 S&P highs in the last 6 months and 57 highs in 2024. So the bull market is not broken. This is just a pullback that you need to take advantage of.
Well, it's so interesting because I would say we've had volatility. It just happens to be to the upside. But if you look at the VIX, it is going down to, I believe, a 2-week low earlier here. We've got the VIX at the moment. Let me show you here. It was below 20 the last I looked. We've got it now below 19. That just happened. So we are at the lows of the session here. We're at 18.71. Folks, historically, that is very low. Down about 8.7% at the moment. What do we read into that?
Well, again, I think that divergence was very important because you would think when the market makes swing lows that people would get very afraid,
right,
and that that VIX would spike. But it didn't do that on Friday. It again didn't take out those October highs. That is very much a sign, a positive sign, where psychologically people may have felt a lot of fear on Friday, but we've built on that, and now you can look at the S&P and try and look at it in big terms instead of this intraday action. We've been between 6,500 here in the S&P and 7,000. So a breakout of this range target, 7,500. Right now, we're right at the midpoint at 6,750. So that upside target that's happened every single time in market history, the distance of that drop on that old top is 11% above where we are right now. So unless you think it's different this time, and I don't think the fundamentals have changed one bit, we had amazing earnings season. All that we've seen is a pause as far as rates go a little bit, and we've seen a pause in the dollar decline. The dollar decline was fueling the market, and we've seen a pause in the fundamental facts that came out that told us how amazing the profit margins were, the revenue margins were, the beats, the earnings expectations. So the fundamentals are there. Corporations are doing extremely, extremely well, but we don't get any new news really till January now.
In the last 10 minutes of his show, Charles was talking with Jay Hatsfield about small caps that pay a dividend. Well, we know that some investors are a little nervous about small caps. We were looking and did a stock screener of large caps that have a low PE and a solid dividend.
Right.
3 of these names popped up, among them IBM, Chevron, ExxonMobil. PE for IBM 26, dividend of 2.6%. Chevron PE of 20, dividend of 4.5%. I mean, the lower these go, it's nice. PE of 16 for ExxonMobil, dividend of 3.5%. Should some investors be kind of transitioning or rotating into names like this?
Well, I think the rotation already happened. Not to say that you can't get into those stocks that are going to move more slowly. Something like a Coke has had a very nice performance here recently as people have shied away from the really shiny stocks. There's always great opportunities, and again, PE is a good measurement. Something like a Keurig, Dr. Pepper. Dr. Pepper's now the second cola. It's overtaken Pepsi. So the PE on that stock's only 13, and that stock's down 25%. So I'm about risk reward and PE are the two things that I focus on. If you want yield, I mean, everybody can still get 4% yield, anywhere in their high yielding accounts. So, there is still that opportunity that we've only seen in the last year out of the last 2 decades where you can actually make money with your money and not have it in the stock market. But I think there are more opportunities especially right now after this pullback. From a risk-reward standpoint, you want to be a buyer when it looks bad right now and look at this base that we're building in a lot of these stocks. But unfortunately, a lot of people will chase stocks. They'll get into NVIDIA when it's above 200 instead of buying it when it's at 170. Or we just saw Apple and Google, if you want to look at the Magnificent Seven as
Apple
a very
just hit a
positive
record.
sign. Apple and Google, new records today.
Yeah.
So it's not over. And so you just saw money move, and you've got to find the stocks that maybe haven't been the best sellers lately.
Yeah, and again, beware, we do have what we got today, which was actual data, retail sales, and boy, did they markedly slow down. Again, this was for September, so very rearview mirror. It's delayed because of the government shutdown that, of course, ended November 12th, but it just encompassed so much data that everybody needed. Month over month, up 0.2%. That was slow. It's really the year over year, 4.3%. You know, that was a much bigger number year over year. And then if you look at the core, that's the issue. The core went negative. Actual negative.
I think we could get another market melt up by the end of the year. You just need the dollar to stop with this firmness and have a little bit of a decline here, and then stocks are going to start reflecting that price action that has supported the markets for the last year or two.
Alan, I'm glad to see you and the crew down at the SIBA working up a storm there on this holiday shortened week.
Always opportunity. Just remember that.
That's right. Always be closing. ABC. Good to see you, Alan. Thanks so much.
Thanks.
All right.